What is going on, you guys? How's it going? My name is Q, and welcome back. If you guys are in part of the Hyper Chat, how's it going, Hyper Fam? Thank you so much for checking in. Today, I'm going to answer one of the most popular questions that I have ever gotten during my trading career, and I will say this is probably the best question that you can ask me if you are an active day trader or an active trader at all. And the reason why is because it is so important to understand candlestick charts when you're trading, because if you don't, then you're unfortunately not going to have a very good time trading, because if you don't understand candlestick charts, you don't understand how price action works. And if you don't understand how price action works, you fail to read the story of the market. I always say, when you're looking at candlestick charts, look at them as a story. Don't look at them as numbers. Don't look at them as statistics or analytics or anything like that. Read a story in the candlestick charts. Look at them as an entire dynamic. Look at them and how they function together on all time frames. So the question that I'm presented with is, what time frame do you look at when you are trading stocks? And my favorite answer is all time frames. However, if you want a more specified time frame, you want to focus on the time frame in which you're planning to hold the stock within the strategy that you're planning to approach the stock with. By that I mean, if you are a day trader, then you want to focus on a time frame in which the stock is trading within the day. That means your main focuses are going to be the 1 minute candles, the 5 minute candles, the hourly candles, but you also want to keep the daily candle in mind. And the reason why is going to be because of the following. If we were looking at MMAT today, which was one of the more popular stocks on the stock market, the name had a ton of volume flowing through it. The stock was expected to make a very strong move on its second breakout through the day. So you can see in the first 5 minutes, in the first few hours of the stock market, the stock had a ton of movement. It broke out early morning from the 3.30 resistance, and it rallied all the way to a point of $3.80. So say you wanted to day trade the stock and you didn't know how to approach it and what time frame to focus on. If you were only focusing on the 1 minute time frame, you would have known that in the first I would say roughly 30 minutes of the day, the stock had a substantial amount of buying volume until it got rejected at $3.80. So we zoom out here and we see what happened next. So after the $3.80 rejection, the stock came down and it retested the 20-day moving average support right around $3.55. So why am I telling you this if I'm focused on time frames? Notice this entire time I've been talking, I have not mentioned any other time frame than the 1 minute time frame, and that's because the way that you would approach the stock is with a day trader's mentality. If you're looking to buy and sell within the same day, why would you focus on a daily candle? Here's why, and I'm going to tell you why. The only time you need to focus on a daily candle when you are day trading is a time in which you need to figure out if there is an upcoming resistance point that you may have not seen or you may not see on a 1 and 5 minute chart. Let me give you an example of exactly how that plays out here in this stock. So everybody believed that this stock was actually going to make an insane rally today. Many people actually, you can see right over here, as soon as the stock broke that $4 mark, you can see that a ton of buying volume flowed in. But notice how the stock failed to hold the breakout. On any given textbook breakout, this would have actually rallied over $5. It would have rallied. Why did it not rally, however? And this is where the dynamic of different time frames comes into play. Look at the daily candle and see if there's any upcoming resistance points that you may have not seen on the shorter term time frames. And what do you know? We have the 10 and the 20-day moving averages. You can see that the blue color here is the 10-day moving average. We have it here acting as a resistance at $4.06. So you notice how the daily candle attempted that breakout above but failed to hold the breakout. That's the reason you want to keep a macro or a daily candle time frame in mind. You don't want to use it as your main point of guidance if you're looking at a day trade, but you want to keep in mind any upcoming resistance points that may hurt the stock or may stop the stock from pushing Further, this doesn't mean the stock won't go and move higher tomorrow, and we'll explain how it will tomorrow, how it may do tomorrow in just a second. But it just means that if you are a day trader and if you don't pay attention to the daily candles, most of the time it's the moving averages that are coming up as a resistance, or if you need to use them as a support, those are your substantial points that you need to look at when you're looking at a daily candle in order to establish how strong the reversal may be, how strong the setup may be on an upside move. So any experienced trader that got into MMAT this morning knew that they needed to focus on the minute by minute time frame for them to capitalize on any upside move. They need to focus on volume. Where is volume going? Is it shifting up? Is it shifting down? Any experienced trader, though, would have looked at the daily candle and saw that there was a significant resistance coming up at a resistance point in which in this case was the 10-day MA, which indeed acted as a resistance. Notice as the stock tried to break above it but came back down, and that's the importance of knowing the macro picture even when you're trading on a day trading level. But your main points of focus will always remain the 1 and the 5-minute candles when you are looking to day trade. So if you're looking to day trade and stay within the same day for buying and selling, focus on the shorter term candles, but keep in mind the macro picture for any upcoming resistance or support points if you want to use them as support. Now, when you're looking at a swing trade, however, what do you focus on? Don't worry about the minute by minute candles. The only times that you need to focus on when you're swing trading are going to be the hourly candles, and then as well as the daily candles. So in this case, let's take a look at another stock. So if we're looking at, for example, let's actually pull up a stock that leisure. Let's look at, why don't we pull up American Airlines? So AAL, we can see that American Airlines, in this case, has given us 3 back-to-back days of buying, and we're not focused on any other time frame here except the daily. So we have the daily candles pulled up, and the daily candles look nice and strong. You have a buying candle right over here at the 200-day MA, in which shows that traders are interested in buying this candle and not letting it dip below the 200-day MA. So therefore, now we have our first signal that there's a lot of interest in the stock. Second candle, a lot of strong buying volume in which closed above the 10-day MA. Third candle, closed above the 20-day MA. This is all daily candles. We know that these candles are nice and strong. They're pointing that a swing is very much possible and feasible for this stock. Now what do we need for us to set our setups? Because obviously the difference between $18.30, which is our main support on the daily chart, and $21.60, which are our highest point from the daily chart, is going to be a little bit of too much risk. Therefore, for us to create a setup around the stock, now that we know that the daily candles look good, we need to figure out what the hourly candles are doing, which is the next time frame that you need to look at when you are looking to create a swing setup. When looking at the hourly candles, we can see that there was a strong hourly rejection on the second hour of the day, which volume outweighed all the other buying candles, which is why it's important to break down the time frame that you're looking at. So these hourly candles, all they do is they form that daily candles, but we know now that in the second hour of the day, we had a strong amount of sellers that rejected the stock from a high of 2160, therefore making 2160 the strong resistance to focus on. So see how important it is to have those time frames play together in a dynamic fashion rather than looking at them individually. We need to figure out just how much volume was actually distributed from that green daily candle towards the buyers rather than just looking at it with almost of a vague point of view without breaking it down further. So once again, we're looking at swings, we're focused on daily and hourly. We're looking at day trades, we're focused on hourly, minute, we're focused on minute, 5-minute, sometimes hourly, and daily, just to see if there's any upcoming resistances or supports that we may not find on the intraday chart. So in this case, American Airlines, we know that the hourlies look good. However, when we're looking at we know that the daily looks good. You can see that the dailies look very attractive and they look like they're going to give us a setup. But when we look at the hourly, we see that one, the RSI is in overbought levels. Two, the stock looks stretched out. Three, the stock has that strong rejection on the second hour of the day. Therefore, from this analysis, we can derive that the stock may gap up tomorrow and get rejected back down towards 2050 and then consolidate between those 2 points. Or it may actually just open flat and come back to retest the support. So you see how the daily candle in this case looked good, but the hourly candles pointed to a potential pullback. There's another reason why you need to look at daily time frames and hourly time frames for those swings. So you want to focus on the longer time frames for a longer period hold. You want to focus on a shorter term time frame for a shorter period strategy hold. That's the most simple way I can put it, you guys. This is just a beginner's video. If you're confused and you need more technical analysis, look through the channel. There's a lot of technical analysis videos. You need to understand candlesticks for you to be a successful trader, you guys. At least an active trader. If you are a kind of a buy and hold based on the company's returns, then you don't really need candlesticks. But for you to be actively trading, you need to understand candlesticks and you need to read them as a story. Don't read them as an analytical piece or a numbers piece. Look at them as a story. See what traders are doing, because all these lines or these charts, they're created by traders just like you and me. The reason why these move up and down is because of psychology. So the psychology of this day was that traders felt happy about the stock in the morning, but as soon as the second hour hits, traders wanted to take a lot of profit, given here by this volume example. Then the third hour of the day, traders felt a little bit more happy about the stock, but they were still shaky. Notice how the volume never picked up above the profit taking volume or the first hour of buying. So that's just breaking down the psychology of what happened during that day. So ask yourself, do you want to enter a stock that had that much selling on the second hour of the day and never recoup those buyers throughout the day, or not? So those are kind of like a simple way to put what trading candlesticks is. It's all psychological, you guys. Ask yourself what's happening in the psychology of this trade or within these time frames, and how can I capitalize, or should I stay away? Thank you guys for checking in. Hope you guys have a great trade.